now going to turn to the panel. Also want to invite Andreas Melan from IKEA Global Payments to the panel. The way we do this, we'll first just to warm up, discuss some questions that I prepared, and after that you're kindly invited to issue your own questions from the audience. You can do that through the app, and I already see them coming in, questions here on the stage. But also you can grab a physical microphone if you feel more comfortable doing that. Also, if you hear some interesting things, don't hesitate to tweet it using the hashtag, which is, well, it was on the screen. It's at hashtag MPE ecosystem. Okay. Andreas, because we're talking about acquiring 2.0 here, what has to happen for you as a global merchant working in so many countries, working in so different new payment methods, being both an online and an offline a merchant? What do you think is to happen to really come to an acquiring 2.0? What are some requirements and what some of the challenges you still see in the market?
First of all, thank you for having me here. My view is a little bit different, of course, because now we've heard about the future and what PSPs and acquirers are about to deliver. Living at the current situation that we are in, we've seen quite prominent mergers and acquisitions, which actually led to an even higher complexity from our perspective, because we're dealing with 93 different solutions in 30 countries when we collect all the different platforms from PSPs as well as acquirers, online, offline, all together. Right. So you can imagine it's quite a hassle to maintain all this and very, very expensive to connect to all these different solutions. We are actually also envisaging 3 different speeds. We have Europe, which is slowly but surely developing. Then we have the US, where it takes forever to implement chip and PIN. And then we have our friends in Asia, India and China, which teach us quite a different story. They are developing at the speed of light, more or less. So the question is, from a European perspective, where will we end up? We have a unique opportunity now, to my opinion, to have our own scheme here in Europe with a SIPA credit transfer, and there is an initiative ongoing. When I look at the acquirers here in Europe, my opinion is that there were very few ones actually that even in 2019 are capable to deliver true interchange plus. So the interchange is not the hassle, and the second plus, they know their cost and what they charge us. It seems to be very tricky for them to know and to charge the right scheme fees. This is where the issue sits, because you have yearly fees, fixed fees, ad valorem, bilateral agreements, volumes, discounts. To my surprise, quite a few acquirers actually don't know exactly what to charge. We've seen it now because we were asked as one of the bigger retailers to contribute to the revision of the interchange fee regulation and the cost from the European Commission, actually cooperation with you guys from Ernst & Young. And actually what we get from the countries, the feedback we get from the countries is quite sloppy, to be honest. And then there is another big topic which I'm lobbying for since almost 10 years, and this is cross-border acquiring, which I strongly believe in, because we get some synergies, we leverage some synergies. We still face some issues with country regulations in Denmark. You have to have a Danish acquirer in order to transfer all these Danish transactions from Dancourt. We have some countries with bilateral agreements, like the Netherlands, like Sweden, where it's basically impossible for a cross-border acquirer to do business there. We have local debit here in Germany. We are running 3 billion euros through the local debit, so there is no alternative, no offer actually from any scheme to be competitive. Then we have some countries, especially in the south, where any cross-border acquiring attempt will be swiped out with pricing on us, on us pricing, for instance. And then, of course, you're facing also the issues with non-comparable offers, because some local acquirers actually price in things like DCC, which you're not even aware of that you're offering it, but then at the end of the day, when you implement it, you see something on your terminal that you were not fully aware of. So there are quite some challenges as a retailer. And when we talked about the omnichannel capability here, and it's been a lot of discussions here, I think we all, and it doesn't matter which industry you're in, if you're a retailer, if you're a acquirer, or if you're a PSP, especially PSPs, I must say, we all fail if we do not manage to put ourselves into the shoes of a customer. And the way how customers are behaving is really changing a lot based on the technology that they're using now. I mean, just think about you're coming to IKEA with your iPad or your phone, and you see the queues downstairs, or you don't even have a car, but you like the sofa. Then you actually purchase online in the store. And then you don't want to carry anything around with you, so you just order everything at once because it's delivered at once. And then the cover you get is not the cover you really like. The color looks different in the store than it looks at home. So in any event, you just grab it, go to IKEA, and give it back. So from a customer perspective, it's quite logic, no problem, no hassle at all. But it doesn't work if you don't have the same PSP for online as well as for store and the same acquirer, because then you can't track and trace the transaction. And then the problem starts actually not with the acquirer, the problem starts with the PSP, because we have lots of PSPs that are specialized for being either online or a POS, brick and mortar. But you hardly have anyone that can serve you on a broader scale in Europe. That's the issues that we are currently fighting with.
Yeah, so we've been talking all during the presentations during those days. So we're basically looking at one customer proposition. For the customer, it should not really matter if he or she takes the online route or the physical route. It'll be combined. That's the vision. But to realize this vision seems to be that still some big steps to make. Is there one of the panelists that want to comment on this?
Yeah, of course. So I think that the Acquire 2.0 today, in a perfect world, is actually an acquire capable of talking to any channel. So meaning POS, wallets, IVR, or wherever. Talking to any scheme. Managing interchange. So Andreas talked about interchange plus. We had the experience with the interchange plus, how to calculate it, and actually it is changing from a scheme to another, especially if you're cross-border. So we had a very rare example with an acquirer which is in Europe and in the Caribbean. And for the Caribbean, it's another way of other requirements for the calculation of this interchange, actually. So, I mean, for me, it's the technology actually is very important. But the fact is that you need a real core business that is solid, and then through APIs, be capable to talk to any channel, to any scheme, to have your set of rules, managed within your platform, and it's something very, very challenging actually today. So.
Just would like to add something to what I just said about Interchange++. We made a European-wide tender 1.5 years ago, and in the last round we were asking for those acquirers that were left to sign their offer, because we had very bad experience from another smaller tender for one European country where in the end they didn't actually stick to the offer. And they said, yeah, well, the scheme fees have changed, blah, blah, blah. So we said, please sign the offer with the scheme fees on a certain date so that it's the same for everyone. It was quite surprising. A few acquirers said, yeah, we can do this, took a week or two, and then they signed. And some said, well, if we have to sign it, we just withdraw with the offer. So that's how secure they are with the scheme fees and how secure they are with what they're offering, or what their technology is supporting them.
There's still some complexity around the world. Will these new open banking, PSD2, payment initiation services change things? Andreas, you covered this in your presentation. Something you think is going to save?
Well, it probably will get even worse if you think about the increasing complexity and adding new payment schemes and so on, and even if they get acceptance at the merchant. So in Sweden, IKEA's home market, you have Swish, and first it's just among consumers, then people want to pay the merchant, then IKEA needs to react to that, accept that payment method. So I don't see that open banking will necessarily at the checkout reduce complexity, maybe the opposite. But I find it always revealing when Andreas shares his worries and concerns with regard to international payments acceptance and how difficult it is still to provide a true international omni-channel proposition. But I know we have a couple of people here on the panel who try to solve that issue.
Evelien, you should recognize this as ING is operating in multiple countries. So do you recognize these issues? How do you work around those?
We touched upon a lot of issues. So I think maybe to start with the technology one, I think you're very right that to see that there are very few parties that really have a true omni-channel solution. So what I said earlier, so quite often omni-channel is translated in, okay, we combine the reporting and then it's omni-channel. But if you really want to facilitate an omni-channel journey, that is indeed what you're talking about. And that's also what we are building together with Payvision. And what we notice is that the e-com environment is a very specific environment with its own challenges, but POS as well. So the connectivity with different kind of POS terminals that you might have with the cash registers. This is not to be underestimated. So what you indeed see is if you take a company that comes from either of those two worlds, they underestimate the complexity of the other world. So that is one of the reasons why we are quite big in store. Really said we need to have a specialist and to really combine forces to be able to really understand the challenge and to build on that. I'm not saying that we have a full answer tomorrow. But we are launching an offer, like you were saying, beginning of Q2 this year, together with Payvision. So that's part. The other part on having local payment schemes and the tariffs that are different, which make you want to, or maybe not want, but for pricing reasons, not to go with a global one. I think that's in the end is also a choice to be made by the retailer. So if you get the ease, let's put it this way, of a PSP governing all the payment methods as much as possible, but maybe then not get the best price for XYZ payment methods, that's I can't look into, but that can be a trade-off. I think that is to be discussed. So the technical complexity of the setup compared to maybe for one payment method a lower pricing per transaction. But
Thanks. Maybe we can cover one of the questions coming from the audience, which is an interesting one, from Ben's Faradi Tsabo. I'm not sure I pronounced the name correctly, but the question is, where will money be made in Acquiring 2.0? The more players coming to the party, merchants knowing exactly how to negotiate deals. So it seems like the only way for pricing is down, and does it mean that when margins come under pressure, that all the great things that we hear on the conference actually cannot be realized because there's sufficient innovation money available? Is that something you see, or where are we going to create the new business models?
I think that Interchange++ helped a lot in that respect, because in the old days when I started 10 years ago, I know that a lot of negotiations were around the so-called MSC, because it was a blended fee, no one knew what's in there, it's just too high. And the messenger was the acquirer, so the full hammer went to the acquirer. Understanding the industry a little bit better, we changed our focus, and then we actually went to our friends from the schemes and the issuing banks and told them that they have to do something about it, and the regulator says nothing has happened. Yeah. So we very quickly ran away from approaching the acquirers for the overall MSC. Now with Interchange++, I think it's very clear what they charge, and the pressure and the focus has absolutely moved away, at least from our perspective. The focus has moved away from the pure negotiation with the acquirers into what is happening on the scheme fee side, because now it's transparent through the First Plus and the Interchange++, and of course what's going on with Interchange. What's happening on the non-regulated side.
Yep. Maybe just to add, and I'm convinced that there will still be money made in pure core acquiring, so just for payment acceptance. But if you look at the business models of acquirers, most of them describe themselves not only as acquirers anymore, but as merchant service providers. And that for a reason, because they're holding the merchant relationship, and the goal is to sell other services into that relationship. And that starts, can be other business services, can be other financial services, and so on. And that's probably a goal to where additional money will be made going forward.
Zdzisław, you recognize this?
Correctly. I do confirm also from acquirer's point of view that we do observe such a situation. Well, let's face it, the margins are becoming razor thin at this moment. So there's a constant need to find new ways to make some value-added services. For example, for sure, big data and data feeds to the merchants can be such a source. But answering the question that you can see on the picture, I do believe that in the short and the mid run, there should be eruption of new payment methods after open banking, because for sure it is a game changer. But in the long run, only a few can win. Why? Because you need two factors to be the winner. The first is user experience, of course, I mean convenience, and the second factor is cost. And you cannot be cost efficient if you do not get the scale. And only a few payment methods can get the scale in the long run. So I do believe that acquirers need to look who will win and to take part in the race, maybe become more fintech-like and not just acquirers.
Yeah, that's another good point. I looked at the acquiring market in the US last year. It's about the 10 largest ones have around 90% market share. So it's quite a consolidated market. If you look at Europe, then per country, it's also quite consolidated. But on a pan-European level, it's probably around 50%. So are we going to see more consolidation in the coming years, in your view?
It happens, and we do observe across CE, across the Europe, consolidations on the level of only e-commerce solutions that want to enter post-terminals, as well as the opposite. So for sure, to gain economies of scales, you need to acquire other players.
Yep. You observe the same?
Oh, fully agree. The M&A environment in payments is extremely active. There's a clear strategic rationale for acquisitions, and this will continue until there is a very limited number of scalable players in the market. And it's probably not only European players, but cross-border players. Like you saw, the combination of Wordline and Ventive was probably the first large one. We heard Wordline speaking earlier today that they're looking. So I think that's going to be a bigger dimension than we see at the moment.
Okay. Maybe take the next question from the audience, from Alan Veljan. So apart from a potential token stored at scheme level, is there any other initiative that is taken place as part of open banking to overcome the pain related to omnichannel described by Andreas? So so what are some of the initiatives that we do create a real omni-channel proposition from technology perspective?
So I'll speak as the tech guy.
Definitely.
It's technologically speaking. Yeah, there are ways. Today you can convert an ISO 222 to an ISO 95, 93 or 85, 83, sorry. But the thing is that from a technology perspective, you need also, once you've converted your protocols, once you've learned to be omni-channel, to speak to any kind of I would say of channel, you need also to take into consideration one thing. You need to be also quick against all the fintechs that are coming to the market today. So if tomorrow you need to launch a new product, or you need to, I don't know, to launch invisible payments, if you will spend 1 year to understand the protocol, the requirements, and then convert it, you've lost everything. So I think my feeling is that we have today APIs that can answer to this question, but still we didn't answer the overall challenge, and we still need to think, I would say, all together, especially in Europe, and maybe find one common protocol or find one common way of doing things to be able to answer this question.
Now, imagine you are an acquirer that's been around in the market for 20 years. And in the process, you've acquired some other processors across the European region. So you probably have the experience of having multiple platforms that you have to manage. And you have your existing client requirements, you have your systems have been years old. And now you have this fintech provider coming to market with a completely new platform, completely API'd. How are you competing against these new players? Because they seem to be much better positioned, at least from a technology perspective. And technology today is everything, isn't it?
We're in at least or almost 90 countries today. So worldwide speaking, it's not easy to manage. We've been certified with at least 25 schemes, and still, I don't have to say that, but still we have customers downgraded by Visa because they didn't manage some required information or whatever. So in technologically speaking, it's not easy to integrate all the rules, all protocols, and multi-currency being cross-border, like Andreas said, it's very important. But at the end, the technology cannot answer the whole problem. We need at least to find a common way of doing things, because you can have the technology to do whatever protocol or whatever channel, but at the end it's still complicated because you need to maintain this, you need to set and to have all these requirements, and at the end of, I would say, at the end of the game, the technology is not only the answer. So yes, fintechs are bringing some solution to some of, I would say, of the challenges, and it's hard to compete because you're an acquirer. You need to be certified with 5 schemes. You need to manage whatever channel. And at the end, you have a fintech managing only the loyalty, another one who will manage only the pre-acquiring, and they're doing a very good job because they're agile, they're young, and so for me, technology is maybe one answer, but the other one, I think that we need all of us to sit together and find a solution, find a common solution. So
yeah, is maybe partnerships the answer, Andreas? Any?
I don't think so. I mean, at the moment they are just purchasing market shares, to my opinion, and not so much really joining forces from a technology perspective. But what I wanted to say here, I'm not naming the company, but you most likely know it. There is a Dutch PSP/acquirer, and when you look at the market capitalization when they went to the stock market, it's just the trust into that technology company, and the speed of development is, I mean, if you draw the line, if that would be a steady line, then in 3 years from now, the whole market will look completely different. Of course, they have to grow and they have to have a bit of organic growth as well, but it's quite amazing. Because they build it really from scratch. They did not have to take care of platforms that are older than 90% of the people that are actually working on them. And that's also a problem that there are quite a few acquirers out there in the market that have very, very old platforms. And then one platform leans to the other. So there's a lot of really old technology out there. And those ones that actually have overcome that, I strongly believe that it's not the size and not the mergers and acquisitions, it's the technology that will generate speed and growth.
We do observe.
You can quote me on that later onwards in 2 or 3 years.
Yeah.
As a multinational acquirer, we do observe the same situation regarding fintechs and framework. Because what we have started with was a kind of internationalization of tenders and RFPs by the merchants. To address it, you need one framework. You cannot have one value proposition for the merchant if you have different framework, different technology, different system in Czech, in Romania, and Poland, because you will have different SLA, for example. So we need one framework. And in the long run, probably only these acquirers will win that will have this one framework. And with regard to the fintechs, they're much smaller, and there's always a problem with trust, I do suppose, as Andreas said. And we may expect some probably failures with such a trust because of the hugeness of these ecosystems. Like, for example, we have seen some failures of the trust with cryptocurrencies recently. So it may happen.
Yeah, so we have the vision, but to the realization, between the realization today and the vision, it's still a lot of work to do, apparently. It was said technology is not everything, but yeah, if you look at some of the fintechs that you're referring to, they seem to have the advantage because, logically speaking, there is no legacy to take care of.
No, they designed it actually for omnichannel. They were the first one. They didn't. Yeah. So a POS acquirer purchasing an online acquirer or platform, they were designing it from scratch. There was no other intention than omnichannel.
Yeah.
Having said that, is that the it's also one solution. So the for example on the POS side. It is that or not. So what you see with, and that's the value I think you try to say also of some of the players that are there, is that they also have a choice. You have a choice at the retailer side, for example, how you want to have your POS infrastructure and how you want to have your cash register, instead to get a one box, and that's how it works. So those are choices, and I think the investment that we need to do going forward, will be on the acquiring side and on the supplier side, but we need also to be clear is that there's a lot of technology also going into that seamless shopping experience in IKEA, or not IKEA only, but the retailers. So the shopping experience that you describe requires a lot from the acquiring space, but will also require a lot from the retailer itself to be able to facilitate that seamless shopping experience. So I do agree that technology is one of the key things going forward, but I think on both sides of the cooperation. So together we need to fit. So yeah, there is still a journey to go, but it's really a joint journey driven by consumers and then made possible by technology.
All right, thanks. Maybe as we're almost on time or over time. The bridge to the next session, which is about open banking, PS2. What I hear a lot is card payments have had their best time, and they're going to be over time replaced by these new payment initiation services because they're cheaper, they're faster, and there's less hassle. What's your view on that? Maybe very quick. Is cards going to be replaced in the next 5 to 10 years, or what's your opinion?
Well,
maybe start with you,
if I
Andreas.
start, definitely not. I think in payments, everything happens very slow anyway. And in particular, the credit card has a very clear value proposition that is different from debit or for account-to-account payments.
Okay.
When it comes to plastic card, of course, there will be replaced. I do believe it's about belief, not the fact that it can happen within 5 or 10 years. But when it comes to the framework behind the card, for example, card on file, it will remain. And for example, in Poland, the role of cards is increasing. I mean, not physical cards, but the tokenization and the solutions behind it. So I do believe that the framework will remain.
Well, I don't believe that cards will disappear at all, but I do believe that, say, alternative payment methods will grab a significant space, a place in the pie. That's my take.
Yeah, it's my feeling also. I mean, I do agree with you. I don't think that credit card will disappear. I mean, it's fancy. Everybody needs a credit card, but still, I think there will be a new way of payments, more and more like invisible payments, wallets, that are bringing more added value with loyalties, with more data. And I think that the center, the next 5 years, the data and what you can do with it will be very, very essential. And for me, this is something that maybe we're not using a lot today. I mean, as a payment providers or acquirers. But I think in the next 5 years, it will take a very important place.
Okay.
I believe cards will not disappear in the near future, at least 10 years. And 10 years are a long period of time anyway. I strongly believe that if we can make SEPA credit transfer comparable convenient, then it will fly. If we don't manage to make it convenient, no one will use it. But looking at solutions out on the market, like in the Nordics, it is convenient, it's fast, it's accepted. So we just need to make one common solution or one common standard for Europe, because then it makes also a lot of sense to implement it on a broader scale. If we have to implement it 27 times, it will be hard to get a business case out of it.
Yeah, we will need another SEPA to make it happen. Thank you very much for the discussion. Thank for the audience for your attention, and we're up for coffees.